The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. Thank you to our hosts. Great programs. Let's hope we can keep that standard up all day. And we've got a very interesting market here. Let me just get out of this. Now this is the NQM 10-minute NDX 100 June contract. Just made a peak G in the Chapman wave, pulling back. Bunch of things going on here, usurping a lot of energy, but the overall market has not gone to new recovery highs. That's the Dow, the S&P, IWM, New York Stock Exchange, but the QQQ series trust has. So that's going to be very important. We've got a peak G as well in the 10-minute E-mini. So let me get out of this. I need to show you a couple of things. Just for parameters, looking at moving above 23,400 again would be very positive if we can do that. At the same time, let me see, so the high today is 2,400, so that would be very positive. It's at 23.9825, and pulling back underneath 23.96 at any point today would be a big negative. So let me just do this. Within the context of the markets, I'm going to run the numbers. The E-mini is up 3. It's gone above the 23.97 March high, and it went to the high today of, what did I say, 2400.00. That's a round number. If ever there was a round number, we're going to be watching this really close. Remember, I like round numbers. Remember, what was that stock we were looking at the other day? I said, I believe it's made an all-time high beat, BEAT. That was Biotelemetry Inc., the biotech stock. Most fantastic. Number one on the Investors Business Daily. Now it's way back. Now number one is Tel Education. Lam Research is second. This just got knocked off because it was 34 round number high. Peak D in the Chapman wave. Powerful reversal down to 26.50. Trading now at 29. Just horrible chart formation. And now we'll see if we are looking at the NQ. Let's go to NQ. Of course, you can't look at the futures and then look at the continuous contract and expect things to be the same. NG is not what we're looking at. We want NQ. Look, the NQ made a high today of, let me just see, I'm moving that up, moving that up, moving that up. The NQ continuous contract made a high of 5687.75. I've got this as an F/D in the Chapman wave methodology. I don't know if I'll be able to do it. I'll try. But in the Chapman wave methodology, what we look for is to count each higher peak and merely label them alphabetically in order. When you get to the fourth highest peak, peak G, other things can happen. Let me just show you here. The template or the schematic, come down, you start a brand new buy mode. Uppercase letters on the way up all the way to a G, but the fourth highest peak is where you're ready to say, hey, other things can happen. You can recycle higher, but this is also where you can have a much deeper pullback. We're in leg D in the weekly chart. Let's see what happens. It's been a spectacular move so far. A, B, F/C in the 120-minute chart. Oh, it's never easy, is it? And leg C still very positive in the monthly charts of all the indices. So let's go through the numbers. Up 25 in the NQ, but we want to go to, here we go. In the Dow, you had that same cup formation from the 1st of March high of 21,169. So far, you've had emotional, spectacular moves, gap ups to the upside, going to the 21,070 level from the 20,379, excuse me, April 19th low. Made another little cup formation, running out of time in the MACD and stochastic, which are still good, but they are not helping the price. move up like they should. I think this is churning. I think that the consolidation that I've spoken about in the Dow and the S&P, New York Stock Exchange, IWM, Russell 2000 has continued. There are no new highs as of now. There's the cup pattern. Remember, I spoke about this Chapman wave drop bucket formation in the weekly chart. Monthly chart is still very positive, even though it has gone to a peak D. The difference is that all the others, and I'll give you the parameters, a break above 20,120 would be very positive, go to a gray leg C in the daily, and then suggest, yeah, now we can test the 21,169 level from March. But if there's a turnaround from here, that'll be very negative for the MACD and stochastic in the weekly chart and say, hey, there's a deflection lower if, in fact, we start to go under 20,930 at any point this week. Meantime, 20,169 is the all-time high. The S&P SPX.X, we're looking at, I just need to do something here if you don't mind. If I can stretch over, okay. Leg D, finally, in the S&P, no matter how you count it, it's E or a D, and 2400.70, 2403.87. You're at 2480.87, up $1.50. This is starting to look very much like it wants to rally, but it can't. It's using up energy, wheel spin, and there could be a pullback towards the end of the day. The MACD is good. The stochastic's really good at 94%. Somehow this move up should have extended very sharply higher towards the 2411s or higher. So that hasn't happened, but you have got a leg E in the weekly chart, and that is a big positive. And the leg D now starting, I forgot about that. The leg D has just started in the monthly chart of the S&P. Wow, this is going to be very interesting. All right, just calling it interesting for now. Parameters at 2400. A break under 2390 at any point in the next few days would be very negative. A push above 2411 would be very positive. Let's go to the QQQ series. Now, this is going to be very interesting. Look, nice candles, but a real struggle to make the higher highs. It hasn't exploded to the upside, but there's no question this is positive. The MACD is strong, stochastic strong. I've got one indicator, A, B, C, D, E, in leg E, that suggests that you might be in D in the daily, but it's an E in the on-balance volume, and that's suggesting we are really close to at least some kind of a consolidation. Wave 5, leg F in the weekly chart, and leg C in the monthly. So parameters to watch at 138.41, the QQQ power shares trust series. I'm looking at 136.40, says you're down under the 9-period moving average. Could take a few days to get there, or just a sudden bout of bad news. Meantime, that's the level you have to watch. Upside, I would say, if it gets into the 139.20s, there's a good chance it's going to try to test 140. That's all I can say. Now let's go to the IWM. IWM is at this particular point. Let me just check here. IWM is just failing. It's just not a good pattern at all. And I want to go to gold because gold has just been hammered and hammered. It's down again. It's down 9 at 12.17. And that means the dollar could be rallying. And lo and behold, the dollar is rallying. And we'll come back to this because I would have to say that in terms of my work, this is probably the most important week we've had in a very long time. On Friday's close, tremendous amount of information will be imparted. Basil Chapman, Tiger Technicians Hour. I'll be right back after these 4 messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Because this is such an important inflection point, and in the den, for some reason, I had to do a little jiggling of different things right at the last moment before coming on air, and I forgot to repost back into the den. Let me just quickly do this. 10-minute chart made a peak G. And I'm thinking this is really an important moment. The E-mini is up $1.25 now. It did hit 2,400, round number high, and now it's pulling back. If it breaks, I said before, a break under 23.96 would be a negative. We're at 23.96.25 right now. The NQM17, where did it go? Let me do this again. NQM17, that's the NASDAQ 10-minute chart, made a peak G. Pulling back, it hit a high of 5654.25. No, it opened. It hit a high of 5687.75. Trading now at 5673, up 18. Pulling back very sharply from the opening gambit. As I say, I think this is a really important moment. Everyone's talking about how low the VIX is. Everybody's given up on the VIX. I think that the VIX right now is becoming a really important instrument, and we'll see what happens. So on the 10-minute chart, the VIX went down to a low this morning of 9.56, trading now at 9.92. AB, leg B, peak B. We'll see what happens. I just wanted to correct something on all the news reports. I don't know where they get this from. They're talking about the VIX index making a 20-year low. No, it's making a low, but 9.56 hasn't taken out the 2006 low, December at 9.36, and it certainly hasn't taken out the low of 9.29, is it? Let me see, of 1993. There it is. November 1993, 9.31. Oh, interesting. And then within 5 months, it hit 28.30. 1993. No, in 1994. Oh, I remember that well, April. In fact, I remember sitting in April down with one of the top fund managers at Fidelity at the time. And I was with my partner. We were sitting there, and it was very interesting because I had said we had met previous to that, quite a number of months before, and I said my target was, I can't remember what it was on the Dow, and we actually hit that exactly. And then I said to him, but I'm not sure. I think we're going to be in a choppy phase. We might rally and then come back again, but my target has been hit. I think we might just be in for a choppy period. And in fact, that was the low. And let me just check something out. That was the low, 1993. There it is. 1994, right there. It was in April. Yeah, there it is, April. So we hit the low, and then we did chop around, but that actually was the start of a major move to the upside. We didn't take out that low. We did retest. Let's see, the low was Dow 3,000. 3,000. This is what the S&P is right now. The low is 3,520, 3,520 in the S&P. Today we hit 2,400, right? So it was very interesting. So it actually had a good run. It retested, came back and went back to 36. So it was about 300 points higher. But it did chop around and go sideways. Now, what was happening was, yes, peaky, correct. So now what we're looking at here is within the context of the markets, the Dow, if the Dow in the next week or two closes decisively under 20,900, probably I'd have to say 20,820, but I'm just saying the 20,900 will say, oops, they're starting to fail. That would signify that at least we're looking at the continuation of the sideways pattern continuing for at least a little while. But what's really important, until the Qs really give it up and they start to turn down sharply, and the QQQ series closes decisively for the first time since it broke out back on the 19th of April, if it closes under 136, that'll be the first time it's closed under the 136.92 is the 9-period moving average. But if it closes under that, that's going to be very important. So far, all the signs are positive. So we'll have to see where we close on the day. It's a very important day because if after this pullback, the Dow suddenly pushes up 60 points, S&P pushes up 8, and the QQQ goes to the 139, I'd say 139.20s, then I suspect that something else is going on, and we're looking at this acceleration phase, which I'm just hoping it mustn't start now. It's going to start later on. I don't want to use up this energy now. It means that the acceleration phase might be underway. All right? I would prefer we have a nice 6 weeks, 8 weeks of consolidation in the Qs, if it's even possible, and then we can start moving higher, accelerate higher. Okay, I want to go back. We were looking at, so I showed those charts. So we want to look at gold. Gold is down $9 at 12.17. It's making that arch formation, left side, right side. If you look at the GDX is trying to hold. So I'm looking. The reason why I wanted to show the GDX is that I'm beginning to see little bits of signs of strength in some of the gold stocks, but gold itself is not stalling and not stopping the descent. And to me, that's really important. And why? Because if you put it together with the chart pattern we were looking at in the TLT, which is Lehman 20-year T-bond fund in leg E to the downside, but having a high-level consolidation, basically, after going, the body low that we were looking at was 120.21. I've said to subscribers to my opening call, we've got to watch that closely because under 120 is a real problem. And we've gone to a low so far of 120.31. And the low that I'm talking about in the body formation is 120.21. The arch that goes to a lowercase h and then a lowercase m in the weekly chart is still underway. And the monthly chart is holding okay but the technicals are showing no strength whatsoever. I'm watching this real closely because my contention is that if the market starts to fall, then the SPX.X, that's the S&P 500, at 23.99 takes out 23.89, the 9-period exponential moving average support, and starts to trade under 23.84. That'll suggest that the S&P now is back to the consolidation that it had, even though it took out the old high and went to a new high. And I'm going to be watching this very closely. If we're looking at high-grade copper, HG, look, high-grade copper is just going lower and lower. It's really not a very good sign internationally for the economies. I find that hard to believe. If you're looking at the EWQ, which is the French iShares France ETF, at 28.83, having made a peak D recovery high of 29.48 on the 5th. This is going to be very interesting, let me tell you, because this is a single leg up A. It looks like it in a leg D in the weekly, and the monthly chart has had a fabulous move. Do we see some kind of a give back as if to say, okay, now reality has to set in? We'll be looking at this very closely. And crude oil, because the dollar's rallying, crude oil I didn't expect to be up, and it's not. It's down 44 cents at 46. Just stuck in this little arch formation that I drew the other day. Very fascinating markets. I'll be right back. Basil Chapman, Tiger, Dow's down too.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the E-mini went right to 223.95, didn't take it out, and now it's at 23.96. Watching it closely. Look at so I'm looking at the top Investors Business Daily group. Number one is TEL. So that's the Chinese educational schools, after-school tutoring in a leg. This is one of the reasons why I'm a little cautious here in terms of what I see as upside potential, even in the Qs, which are looking fabulous, because he has a leg D. Is now the way to count this at this point. Leg D with a, well, it looks like an evening star doji, but at this point the day's young, who knows what it'll be. A G/C in the weekly, which is still very positive, and a powerful, unless it's recycled, and it could, a leg F in the monthly. So this says to me, be a little careful here, because that's number one. Number two is LRCX. This is Lamb Research. I love the way this happens in the market. You know, you couldn't even imagine that it was possible, that there's a powerful move up, and then there's this arch formation. You see this beautiful arch formation? Just how perfect could it be? You couldn't even draw it more perfectly than that, which says that there should be a right side curve to the downside. Now, sometimes this pattern says, oh, not yet. I've got one more spike to the upside, and it changes the pattern. But this is very interesting, because if Lamb Research in the next 2 days doesn't take out, let me tell you what it was. The 151 round number all-time high that was made 3 days ago, that's a problem. So I'm just putting that number in. I'm not making a fuss. I will make it red for the moment, just so there's noticeable. And that says, watch out. Why? I mean, if you look at Intel, which is a big part of the SMHs, made that rogue wave spike to the upside, peak F right there on the 27th of April at 37.50 and trading now 36.64. Really struggling, chop in the sideways second cup formation. If you look at the SMHs went to a new high. It's at 81.42, trading at 81.28. MACD is good. Stochastic is good. On-balance volume is terrible. I'm not sure about that, but there's a one particular moving average that says be a little careful. It's going to be getting real toppy here. The weekly chart could easily deflect lower if there isn't a move to the 82.30s in the next 3-4 days. If there is a pullback at any point below 79.46 over the next 2 weeks without taking out today's high, that would suggest that the SMHs finally are going to have a bit of a rest. If you're looking at ANET, Arista Networks Inc., number 3, look at this. It recycled. So this is a G/C daily, and now it's gone to a D in the daily. So yeah, you are. Number 3 on the list. D, it could have recycled. I'm calling it an F for now in the weekly chart. And still only a B in the monthly. This is a fantastic cloud network software. This is a fantastic company. But I think you've just outlined for yourself right there the parameters on ANET, trading at 143.73. And that is the high of yesterday, which was 147.55. Let me type that in. 147.55. And the low of 3 days ago, which is 135.21. So that's your boundary for now. Watching it closely. All right. My guess is if it goes under 141, it takes out the 9-period moving average support and it goes lower. So we've been watching these, and so far the signals are saying if such and such, then such and such. There's nothing yet price-wise that's very negative, but technically the MACD is flat. The stochastic's turning down to 82%. This has all the signs that there could be a slide in ANET, Arista Networks. Now, I can't get the emails. I'm sorry about that. I haven't yet got my other computer back, which is really the one that I use all the time for just the real quick messages and stuff. So let me just say that within the context of what I would be looking at, and I know most of you that email me, the questions you have are crude oil. Let me just say that crude oil is a close below yesterday's doji low, which would be the close below 45.73 today, suggests that the trading band hasn't changed. 47.30's resistance and the low of 3 days ago of 43.76 better hold, or else that's a real problem. But I think crude oil is getting to an area where it should start to try to form a base. And the USO kind of confirms that. That's the United States Oil Fund. Because if it doesn't hold, if the USO doesn't hold 942, 943, that's a big problem. Then I think it's going to go down to test the August of 2016 low of 923. So that's that. And now I also want to look at, okay, so now XLF, I'm pretty sure I'd be getting emails about, what about the XLF? I'm watching the XLF real closely. I have no compulsion about buying it or shorting it or anything like that. I've just felt that at this particular point, I want to step aside. I want it to tell me what is next, and I'll explain why. This pattern that we're looking at here in the daily chart, right there, with the H that goes to a lowercase m, becomes a formidable barrier to the upside if certain things happen. And here we are at 2384 in the S&P Select Financial Spider Fund, having made a peak B, hasn't gone to a B minus yet. The MACD is still good. Stochastic's actually at 78%, failed to make a new recovery high. But even this is really important in the context that the price is held above 2377 for 5 sessions, 6, 7, 8. For 8 sessions, even though it's gone below twice, it's held above it on the close. And that's saying to me that there's a chance, now I can get into something I wanted to talk about and combine it, TNX.X. That's the 10-year, which is another question I'm sure I got, that the 10-year Treasury Note Interest Rate Fund, or Index, is in leg C with a good MACD and a strong stochastic at 89%. And that's suggesting, if I can go there for a moment, I'm trying to tie them all in, you'll see, that the H that is inverted, so this is now a cup formation, that went to a peak F at the week of the 10th of March at 32.01, above the December high in the yields of the 30-year, the 10-year, and the 5-year. This cup has a potential to rally. And if it rallies sharper, then bonds are going to start to fall. My thinking is that we will know that I'm thinking, this is my scenario, that if the stock market is going to fall, you will start to see yields declining as the TLT becomes a harbinger of safety for money. And that's kind of my thinking. But within that context, I think that the yields are just stuck in a range. The yields are stuck between 30 years, between, say, 32, and what was the low here? 29, so you can go a little bit low, 28.50, just stuck for maybe another 6 weeks. I'm not sure, that's kind of my thinking. And then if the market does start to tank, and it'll only tank, I can tell you this, if the Dow is in the next 2 days has a minus 130 point move and the S&P goes down 17 points and the VIX index actually goes from $9.82 now to $11.30. Then we're going to see something that we haven't seen for a little while. Why? The down phase. I'll be back. Basil Chapman, Target Technicians Hour. Dow's down 2, S&P's up 0.73.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, we're back. Dow's Ansh, S&P's Ansh. We're going to go straight to Georgia, New York. George, when my engineer started typing a name in, before he even finished, I put in George. And the reason was because you had mentioned the other day that you were looking at Valiant Pharmaceuticals and that you were kind of favorably inclined and that you thought they were doing the right thing. And lo and behold, today it pops up at $1.78 at $11.50 with some pretty good earnings news. Congratulations. Very nice call.
Oh, thank you. I wasn't calling. I was calling for Valiant, but just to give you an update, because you were saying you weren't receiving emails. So what I wanted to tell you was they had earnings today, and of course the earnings were better than the estimates. But the interesting part I found was 2 things. They raised guidance, and they're going to pay down $5 billion of debt this year. So I thought that was. I thought they started to mend their ways slowly.
So it is a slow process, and we don't know whether they are basically cannibalizing by getting rid of their best or getting rid of stuff that they really need later on. But in the meantime, it seems like they're doing the right thing because they made that little doji candle low back at 831. That was on the 24th of April. And that was the turnaround date. And now what we're looking at is a chance to fill the gap, which is trying to do and go to the high of 1255 from the 13th of March of this year. 1255 says you could get there by the 15th of May based on my left side, right side price time match. This is nice. This is very nice. I'm actually pleased that at this time it's still up $1.83, although it was up a little bit more earlier. What's really important is it's holding the gain. Sometimes this is just a news event, and it gives people an opportunity to get out, and then it closes lower than it opened, and so far it's not doing that. This is very nice action, but it is still in an area of biotech that says now it has to be on its own feet because the biotech sector, the IBB, is down. It's at 292. It was down sharply yesterday. It's up a little today. It's still not a favorite sector, but it's holding okay. So Valiant has to, in its own way, say, look, we're an independent company. We got smashed. We were at 263 back in 2015. We had a little problem. We went down to the 8s, and now we're at 1159. We've got a lot of catching up to do. And so far, this is very nice for a turnaround situation.
Right. Okay. Because again, when I look at an investment like this, I normally look on a long-term basis. So I'm not swing trading or day trading this per se. So when I go in, I try to do as best as an analysis as possible. Sometimes I get it wrong. But what I want to say is that I think once we see stability in this on a daily and weekly chart, and we see volume coming in, and we see the next quarter, let's say, and they're showing that they're in the healing process, I think, we could really see a $50 stock out of this in a few years.
Yeah, what's very interesting about what you're saying is it's seldom that a company has had these kinds of problems and has been able to rectify it unless they've got cash in the bank or they're able to cash in on assets that aren't going to impact the core to their major focus. And so far, Valiant seems to be doing just that. They're whittling away. The price is held. It's gone from under $8.50 to 8.3, so 3. That is a very big. That's what is it, about a 38. It's about a 38% gain in just a short period of time. I'm looking at it and saying, you know what? If they're able to do this and the market itself is feeling comfortable enough, I agree with you. See, the volume today is at 62. There's what? Not even. Yeah, it's 2 hours into the morning and it's at 62 million. Yesterday it just had 12 million. The other big day it had was 20 million. So this is huge volume, and it's volume to the upside so far. So I think you've really nailed this very nicely. I'm gonna put this down because I think for the very long term, what I am looking at here is that stocks that have been crushed but have started to mend their ways in a very constructive way, a way that is actually measurable by regular people, not the Wall Street types to come up with PE earnings and stuff that sometimes there's no relationship to the stock. But when you put it together, this looks like it has a functional capacity here to alleviate the problem slowly. They haven't accelerated the problem, and that's
exactly
big.
What I'm thinking. That they could really service the debt, what I call.
Okay, good. I like that. And I'm actually now putting it down because I had it there. We did have a trade on this Valiant way back in July of last year, and it had a spectacular move. I think it was July. Yeah. And then it just failed. So I'm going to keep this in mind, and I'm going to say Valiant Pharmaceuticals at VRX at 11.55. It's in leg C. Might have got away a little bit, but I think starting a little position in this area, I prefer a little lower down, but somewhere here, if we are looking at the next big move into the 15s, then a dollar here or there is not a big deal. But yeah, I think you're right. So thank you for bringing that analysis to our attention the other day. Very good. Actually, for a while you've been talking about it, but you already brought it into focus about last week. You talked about it, so I like that very much.
Basil, could I ask you another question if you have time?
Sure, fire away.
VSI.
Z.
SI.
SI.
Vitamin Shop.
Oh, VSI. Okay. Oh, VSI I haven't looked at for ages. Vitamin Shop. Whenever I see this, I remember having it on my watch list years ago, and I was in Newport with my wife. We were at this little antique place looking around, and I happened to look at VSI, and it was doing very nicely. And then within days, it just tanked. And the only reason I looked at it is because we were driven by a vitamin shop a little earlier, and I thought, I haven't looked at the stock for ages. So, all right, VSI is trading at $9.25, had a high back in 2015 in the 48.49 area, and the low, most recent lows in the $18.50, is it? $18.25 area, so it's a dollar off its most recent low. Tell me that you're liking this stock.
Here's the thing. I always thought the company was pretty good. And then, of course, again, news came out with FDA on GNC and Vitamin Shop about the vitamins that they're not, regulated and news like that. Make a long story short, in Vitamin Shop maybe about a month ago, and just talking to the salespeople and all, and just browsing around.
Okay, wait, hold on. We've got a break. We'll follow it up as soon as we get back. Folks, we're looking at BSI trading at $19.25, up 65 cents. We're on with Georgia and New York, and the Dow is up 2, S&P is up 1. We'll be right back after these very important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi everyone, Basil Chapman, Tiger Technicians. Give me 1 second. I'm just going to do this. So I'm busy notating the chart based on the Chapman methodology. You tell me what you're thinking, George.
All right, just simple. What I wanted to say was just coming into the store and talking to them. Now they're telling me, the salespeople, that in several key stores they're going to bring in nutritionists, and nutritionists will be talking, I guess, to potential customers about certain vitamins, what's good for them, what's not. because I think what happens in these vitamin shops is very overwhelming with all the vitamins.
Absolutely,
So by doing this, it's basically you're getting direction from somebody on what vitamins are good for you and what's going on with your system. So that's
not only that, George. The guide can steer you towards their probably their most expensive weapons that they have.
Most likely. Good point.
So
let
me just tell you, in the daily, it's gone to the lowercase h that goes to a lowercase m, successful because in a peak D, which was very successful because it so far hasn't taken out $18.25. It went down to $18.35 on the 5th. So in my rule of thumb, the next rally should take out the 9-period moving average, which it has at 1896. Therefore, it could rally to the next high bar on the left, which is $20.10. So I'm going to be watching this real closely because I have to tell you, it's tried many times. Very seldom in the past year has it been, I think maybe twice. I'm doing this real quickly. It has the weekly closed above the 9-period moving average. I mean, that's shockingly weak. So this is exactly the area where it needs to show strength by acting well, and the only way it'll do that is if at some point in the next 6 weeks, instead of taking out $18, it pushes above $20.70. The moment it does that, there's an opportunity for the technicals to start turning upward. So I'm going to keep it on my list.
So let's keep an eye on it. That's all I'm saying is just let's leave it on a watch list. And also, they have coming out tomorrow before the market opens.
Oh, they do. So that might resolve the problem for us right away. Good. I'm going to keep a note of that. Thank you so much for calling. Always appreciate it. And congratulations on that valiant call.
And I appreciate it as well. Thank you, Basil.
Thank you.
Have a good
Thank
day.
you very much. You too. So, folks, let's just do this. We've got a moment here. We've got just a few seconds. So let me do this. What I'm talking about here is that we've used up so much time and energy, but the price hasn't gone higher in the Dow, the S&P, the IWM. The QQs have led the way, and they're at this point, so many of the stocks. Let me look at Amazon right now. Amazon I took out the previous high of 954.40, and it's gone to a possible leg F right here, and technicals are still good. But the stochastic isn't even close to where it was back in April when it was making the high. So I have to watch this closely. And let me make it very clear. Until you get a sharp down move, you're not going to get a down move unless it's accompanied by bad news. And the bad news has to push the S&P down, the futures down 15 points, the Dow down triple digit. We just haven't seen that. So I don't want to over-anticipate other than to say we're preparing for some kind of a pullback. But to get that pullback, you have to have the semiconductor index, the SMHs, really start to tank, and you've got to see the QQQs via some of these great leaders start to give back some of the gains. This doesn't have to be a crash. I'm just talking about a rest period to regarner energy so that you can power right through the recent highs of March the 1st in these other indices. And I think until the Qs take a breather, I don't think the others can lead. You've got the generals in the NASDAQ leading, but the soldiers they're at Dunkin' Donuts. They aren't there. So with that in mind, I'll be back later on with Tom. Have a great day. Otherwise, I'll see you tomorrow. And good trading. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.